All right, welcome back. We got our weekly stock market update, and it was a pretty interesting week this week. We've got a volatile week this week, and we had the government finally reopen. So I believe that was on Wednesday. The government opened up again, and along with that, the market began to sell off. I would say probably the reason the market did not like the government reopening was we were expecting to get some economic data that the government has not released since it's been closed, and the government came out and said because of the shutdown we weren't able to collect any data, and we're just not going to release some of the jobs numbers and some of the CPI reports. That's what they said on Wednesday. We'll see if they can bring those numbers together, but the market doesn't like uncertainty, and then also that led the bond market to react to that. Because that lack of data is likely to lead the Federal Reserve to not cut rates in their next meeting. So we saw the prediction markets, the odds of a rate cut coming up is starting to go down quite a bit. So we're at about 30% chance of a rate cut for this next meeting. And so that led the interest rates to start to increase. So the market is doesn't like the uncertainty, and the bond market is reacting to that, saying, hey, maybe we'll have a little bit higher rates for a little bit longer until we get some of the data. So we'll have to wait and see how the next round of economic data comes in. We will wait and see. So markets were down quite a bit. We're looking at the stock heat map here, and it's pretty mixed. You saw some big names. Tesla down 7%, Amazon down 4%, Google down 3%, Oracle down almost 7%. Nvidia and Microsoft are green on the week, which is a surprise. Those names were or Nvidia at least was pretty volatile, and Meta continues to slide down 1%. A lot of the AI talk, the AI bubble talk, is continuing. We have Michael Burry from The Big Short has come out and has some short positions against Nvidia and Palantir, and a few days later he comes out and says he's closing down his fund. So not sure what to make of all of that. A few weeks ago everyone was hammering that he's calling out the next big short, and then he comes out and closes his fund. So don't know what to do with that information. When we look at the heat map here, overall market is pretty flat. The index are basically flat on the week. The S&P and the Nasdaq are flat. Bond market is flat. You have gold up a couple percent, but crypto is getting whacked. Bitcoin down 7%, Ethereum down 5.5%. We'll look at some of those charts here in just a second. But let's take a look at oil, because oil also had a volatile week this week. Prices plunged down and they rebound a little bit, but we're still hanging out around the $60 level. So in reality, not going anywhere, but it is bobbing up and down. Volatility, we did get a little spike here this week. We're giving back some of that this Friday, but we'll have to wait and see what next week brings for us. Not too sure what to think here. With the moves that we've had, it is a little unsettling. No one likes to see Tesla down 7%, Nvidia down 6%, and then rebounding. So it's just been pretty volatile week this week. And then you also have the crypto markets, which we'll take a look right now. Bitcoin 94K. So we broke below the 100K level. We popped back up. And what day was that? Monday. Yeah, Monday looked good. We were up at 106, and then we've just waterfalled down. So we are at 94. Pretty unbelievable moves here for Bitcoin. Again, you zoom way out. Long-term trend is still intact here. And Ethereum, we dipped below 3,000. We popped back up to 36. And here we are again, right back down to that 3,000 level. So not looking too hot here for the crypto market. Now, I was listening to a few podcasts these last couple days, and with the government shutdown, definitely seems like the liquidity overall in the market has been stressed. And so as the government reopens and quantitative tightening, there's the market, we are closed for the week, and quantitative tightening ends in December, we may see liquidity start to ease up again and money start to flow around, and that'll be good for crypto and for just the overall market. But definitely seems like just liquidity is stressed, and there's just no dollars out there. They don't have money to go buy things, people and businesses, and so people are starting to liquidate whatever is liquid and where they can get some cash to go buy the dip, to pay their bills, whatever they need to do. All right, let's go ahead and take a look at the S&P. Not a whole lot to talk about, other than we just had a couple little dips these last couple of weeks. This is where we were on last Friday. We were lower last Friday than where we are today, but it definitely seems like we regained our ground and then we just flushed back again. So we'll have to wait and see. This doesn't look that great for the market, but again, we are just barely off all-time high, so there's nothing to cry about here. But if you're in margin, if you've got a lot of these speculative stocks, you're definitely feeling the pain. And the market didn't close very strong today. We were down 1.5% early this morning, so it was a nice recovery, but we didn't have too much follow through after that. Nasdaq, same thing, just kangarooing around. Drop, bounce, drop. We'll see if we can continue to bounce from here. But again, long-term trend looks good. Amazon pulling back a little bit. Google holding up well. Coinbase getting crushed with crypto. Tesla, we did drop below this $400 support, and now we're just hanging out right in it. Interesting to see where we go the next couple of weeks. If we can get above this 410, 420 level, I think there's another chance we bump our head up against 460. But if not, I think we're going to be in the mid 300s real quick. Just like we already just dropped, $50 real quick this week for Tesla. Hit 380 this week. Nvidia earnings next week, so this is a huge catalyst for the market. So we will have to wait and see. When is their earnings? What day? Wednesday. So that's the day. Mark your calendars. This could put to bed all of the AI is a bubble fears. It's really going to be their guidance. We know that they're probably going to beat on revenue and earnings. $55 billion estimate. And what are they going to guide for? $55 billion. Wow, I didn't realize it went up that much. All right, yeah, this company's still crushing it. So we'll see what they guide for the next quarter, and how far guidance they decide to give us. Anything else to talk about? MicroStrategy falling off a cliff here, under $200. Apple holding up like a champ. Meta not doing anything here, just still consolidating at this 600 level. So not a whole lot to talk about there. Netflix will split on Monday, so that'll be interesting to see. But I think that's all we need to talk about this week. So a lot of volatility, a lot of AI news. We'll have to wait and see what Nvidia says, and we'll see if we get another spike in the volatility. Didn't do any buying this week, just holding pat. I will look to sell some covered calls if we do get a decent bounce. I will definitely sell some calls ahead of Nvidia's earnings against my shares there, just to take advantage of the volatility collapse after earnings. But once we get above the 28 level here for volatility, that's when I'll start doing some purchasing. Even though we did get some discounts this week, like on Tesla and Amazon and Google, they're just not good enough prices for me to really throw a bunch of money in. I'm already pretty fully allocated, so the cash that I do have now, it's got to be a really good deal for me to want to put it to work, and that'll be most likely once we get above that 28 level on the VIX. So that is what I'm waiting for. Until then, I'm being patient. So that's all we got to talk about. All right, have a great weekend, everybody. We'll see you next week. Nvidia earnings. Peace out.